Hi, good evening, everyone. Thank you for joining us for this webinar. All of us here are eager to hear from the market veterans on how to weather such a volatile equity market. US President Trump's tariffs and their impact, I think that is on top of everyone's mind right now. While the short term impact in terms of recent market corrections is here for all of us to see, there's no better person to help us decode the volatility and separate signals from noise than Nilesh Bhai and Vaibhav. Nilesh Shah is the managing director of Kotak Mahindra AMC and one of the most respected voices in India's financial markets, with over 3 decades of experience navigating through market highs and lows. He has served on key policy committees, including member of Economic Advisory Council to the PM. Vaibhav is the co-founder and head of investments at Dezerv. Vaibhav's perspectives combine market intelligence with a very deep understanding of investor behavior, making him a trusted voice for both seasoned as well as first-generation entrepreneurs. Nilesh Bhai, we are truly privileged to have you with us today. Thank you for joining us on such a short notice. We understand you are on your way to the airport. Thank you for being with us here today.
Thank you, Hardik. It's my pleasure.
Let's dive straight in, sir. Nilesh Bhai, Indian equity markets have been under pressure for some time now, and today, of course, was an extension of the reaction. It's fairly established now that the market is reacting to the tariff wars initiated by the US President Donald Trump. Uh, One fundamental question for the audience would love to hear and understand what is the US President Trump attempting to do with these tariffs? What is the end objective? Is it better trade deals? Is this economic nationalism? Is it just political signaling? What, according to you, is the end objective here with the tariff wars initiated?
So, Hardik, it is always difficult to understand President Trump. He is a maverick, and probably it will be very difficult for an average person to understand what drives him. But if you see, is he following wrong objective? Answer is clearly no. He is aware that mighty US is facing fiscal deficit upwards of 6 to 7% a year. Last 8 years, both he and Biden created one of the largest deficit in the US history. When deficit is high, debt to GDP ratio goes up. It is 125% and climbing. And US has unfunded medical aid liability. On top of it, it also has current account deficit of 3% plus every year. No wonder President Trump is trying to course correct American economy, which is going into dangerous zone with high fiscal deficit, high current account deficit, and high debt to GDP ratio. What he's doing is exactly what Bill Clinton did in the late 90s. Mr. President Bill Clinton fired 4 lakh government employees in US, bringing down their employee base by about 17%. By virtue of that cost cutting, America became fiscal surplus under President Clinton for 2-3 years in a row. It had happened earlier in 1970, and thereafter it has never happened. So what President Trump is doing is exactly what President Clinton did, but the approach is vastly different. It is like you are trying to remake Dilwale Dulhaniya Le Jayenge. Well, that movie was a hit. Remake will be hit, no doubt about it. But instead of Shah Rukh Khan born in London, now Shah Rukh Khan is born in Punjab with the twist. Here, tariff have come into play. That is like Dilwale Dulhaniya Le Jayenge with the twist of Deedare Yaar. अब ये मूवी कैसी बनेगी वो किसको पता. In the history of American independence, twice they have raised major tariffs. One was in 1828, resulted into recession. Second one was in 1930, resulted into depression. In fact, someone very nicely mentioned that we temper with tariff at 100-year gap, because all those people who experienced the disaster would have died and no longer protest. So what President Trump is trying to do is balance American economy. The method is very, very aggressive. Probably it is his shock and awe treatment that people come on negotiating table. He wants Europe to bear the burden of defense expenditure, and also Korea, Japan, Saudi Arabia, Qatar, and other countries. He wants to reduce wasteful expenditure in American government. He wants to make American manufacturing great so that they can export themselves and reduce deficit. So objectives are right. The method is in the face, which is shaking up the global economy as well as market. As we speak, Kevin Hassett announced that President Trump is considering postponing tariff for 90 days except for China. In no time, a denial came. No, 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 that is not what is President Trump considering. So while the objectives are right, there is also a challenge. When the Wall Street pain reaches Main Street, a common man, they'll have to take a U-turn. When this tariff war is hurting American consumer with higher inflation, and today I met someone who said 1 dozen eggs in America is now costing $13. And he says, I have stopped eating eggs. Now, when consumers start facing inflation, undoubtedly government will have to take a U-turn. So I will put my bet, despite having the limitation of not able to predict President Trump, that higher American inflation and the pain of Wall Street reaching Main Street will result into some amount of moderation in what President Trump has announced. And his objectives are step in the right direction. When Bill Clinton achieved what he had started of cutting expenditure, US equity market had one of the best bull run. Let's hope and pray this movie is like DDLG remake and there is no Didar-e-Yar into it.
Great. I think that's a splendid explanation. Thank you for the analogy. It makes life simpler to understand in terms of Bollywood movies. And I had a follow-on question which you partly already addressed, Nilesh Bhai, but you mentioned there has been precedent of such actions in the past, uh, which has been done about 100 years apart. Uh, what's been the longer term impact of these actions on US market and of course the global economies?
So there are various experiences, Hardik. But by and large, what does tariff mean? It means that Nilesh, Hardik, and Vaibhav will have to pay higher prices for the same goods. And as there is higher prices, our demand will drop. And as our demand drops, the GDP starts turning negative. So tariffs always destroy aggregate demand and bring misery to people. Of course, there will be some people who will benefit by way of tariff, but the world will end up on the losing side. Normally, for an item, economists have three opinions, one in favor, one against, and one neutral. But on tariff, there is general consensus among economists that this is negative for the world. Now, the people who are levying tariff will argue that, look, when America imposed tariff on Japan, the Japanese trade surplus dwindled and Japanese economy went into recession and they are no longer contender with US. But please remember, Japanese asset prices had gone into bubble territory. And most importantly, Japanese currency appreciated from 300, 400 yen all the way to 80 yen to a dollar. That massive currency appreciation, massive bubble in asset price, along with tariff, created what happened to Japan. Tariff alone was not responsible. So we have to hope and pray that tariffs are used as a shock and awe treatment to bring people on negotiating table. Either it will result into higher buying of US Treasury as US debt is high and there is a big refinance coming. And obviously, refinance has to happen at a lower rate, not at a higher rate. Or you will accept more goods from America. For example, US will prefer that India buys crude from US rather than Saudi or Russia. Our trade deficit with US is about $40 billion. We can easily buy $20 billion of crude and replace it with Saudi or Russian crude. We'll have to incur a little cost in terms of transportation, but overall crude prices has come down thanks to American policy. So either you buy goods from America or you invest in America at lower rate. That seems to be the design behind this chaos. But as I said, it is difficult to predict President Trump. एंड एक वो सलमान खान का डायलॉग इसके लिए बहुत सही है, मेरे बारे में ज्यादा मत सोचो, मैं दिल में आता हूं, समझ में नहीं आता.
Very, very well put, sir. Uh, Vaibhav, that brings me to the next question for you. I know you take very keen interest in global geopolitical situations. Where do you think the ongoing negotiations and impositions settle? Because on one hand, we've seen President Trump come out and say that Vietnam is now at the table and perhaps may bring down their levies on us to 0%. And then there are other countries which are retaliating, saying we'll, counter impose additional tariffs on US imports. So we are seeing these uh, impositions happening between, these countries along with negotiations. Where do you see this settle? That is my first question. Where about the second follow-on question to you? Do we really see a new world order to trade flows now? The famed China plus one, where India was supposed to benefit. Do you think that will finally take shape now?
No, Hardik, so Nilesh bhai explained it pretty well that Trump is a maverick and it's difficult to predict how a maverick would think. But what US is dealing with right now is a lot of conflicting priorities. What they are trying to do is to bring down the inflation because they need to refinance a large debt. But with imposition of tariff, if inflation goes up, then interest rates will not come down. They want a weaker currency so that their trade deficit situation can improve. But if import goes down, their currency will appreciate. So they are dealing with a lot of conflicting priorities. If I have to take a guess, I think there's Trump's opening gambit, and it will get people to come on the table, negotiating table. And as Nilesh bhai explained, people will eventually settle in one of the two ways. Either you buy more from America or you accept some moderate amount of tariff to give America a leeway. I think eventually Trump would want to claim a victory in this process, and starting with a very aggressive positioning is what will help him. In terms of movement away from China and setting up or diversification of supply chain, that has been playing out. And if we look at the tariffs which are stated by US, and if they stand as is, India stands to benefit. But we need to do a lot of work in a lot of areas. A lot of reforms and political will be needed to capture that movement of supply chain away from some other countries. That's these are my two views on both of the questions that you asked.
Fair point, Vaibhav. So while demand may get generated, the supply chain fixes need to happen for us to be able to benefit from that. Fair. Moving on, coming back home, Nilesh bhai obviously discussed Trump and global geopolitical impact and what is his, objective in essentially initiating tariff wars. How do you see India here? One, of course, directly as an impact of tariff wars. Do we get to a relative positioning of strength given that the other geographies are imposed a higher levy? Today, as things stand, of course, this is a developing situation, as you mentioned. But how does it really impact India at a macro level? Would you single out certain sectors which will be severely negatively impacted, and that could be sectors that could be severely positively impacted? And the other question that typically would follow on is any view on the rupee versus dollar in light of the trade wars? Potentially, we also see recomposition of capital flows. So, how does it impact India at a macro level and at the currency level?
So, Hardik, India will get impacted. Our imports are almost $800 billion. And if we take into account exports of goods as well as services like IT plus remittance, that's another $800 billion. Collectively, $1,600 billion of GDP gets influenced by global factors. That's 40% of our GDP. So, whatever happens in the world, we will get impacted. It's like COVID time. When COVID virus spread, everyone got impacted. Someone's immunity was better, so he could withstand and he didn't even notice COVID happen. Someone was very weak and they had to struggle. Fortunately for India, our immunity is strong at this point of time. We are large domestic market. Our monetary policy is easing with higher liquidity and rate cut. Our corporate balance sheet and banking is in good shape. Our fiscal prudence does give us elbow room to spend more money if there is a need. I doubt we will use it, but we have an opportunity. So there are all the ingredients of immunity with us to withstand this storm in a better situation. But please remember that our valuations are also reasonable, keeping those trends in mind. We are not trading at cheap valuation. We are trading at reasonably fair valuation in large caps. Now, how should India play? For example, when Taiwan invited Chinese companies to when Vietnam invited Chinese companies to come to their country, assemble goods, and export it to China as made in Vietnam, it was a strategic move. It gave Vietnam a great advantage as their economy grew on the basis of Chinese investment. The cost was borne by American consumers. President Trump, in the second term, plugged that loophole by putting 90% plus tariff on Vietnam. Now, we have to take advantage of this opportunity. Nike has 100 plus factory in Vietnam. Please come to India. Make shoes over here and we'll roll out we should roll out red carpet for that. Garments, electronic components, chemicals, whatever we can grab from China, Vietnam, Thailand, we should grab and export it to US. In turn, buy oil and defense equipments from US so that deficit remains under control. Hardik bhai, we are one of the largest trade deficit country in the world after US. Number one trade deficit is US. Number two is India. We can tell all the American companies to export to India and reduce this deficit while we continue to export to them in place of China, in place of Vietnam, in place of Thailand. What does this require? We have to support our entrepreneurs, Hardik bhai. Our entrepreneurs are कलयुग का अभिमन्यु. बेचारा पैदा ही चक्रव्यूह में होता है, अपनी मर्जी से चक्रव्यूह में नहीं जाता. एंड महाभारत का अभिमन्यु तो सिर्फ कौरवों से लड़ता था. वो भी 7 महारथी थे, बाकी तो सब सैनिक थे. अपना कलयुग का अभिमन्यु बेचारा कौरव से तो लड़ता ही है, जैसे प्रेसिडेंट ट्रंप की टैरिफ क्या करेगी, बट वो पांडवों से भी लड़ता है. कंप्लायंस बर्डन, रेगुलेटरी बर्डन, एंड वी हैव सीन responses to Commerce Minister's statement that entrepreneurs should focus on deep tech. And so much of anguish is there in our entrepreneurs. We have to unburden our entrepreneurs. We have to free them so that they can compete in the world. If we can unburden our entrepreneurs by improving ease of doing business, and we have done some part, we need to carry it forward, then India will be winner of this opportunity. All these FPIs who have sold will come rushing back to invest if India can deliver better growth and better advantage from this opportunity.
No, excellent point, sir. So unburdening of the Indian entrepreneur is what can lead to us taking benefit of the macro situation currently in play. Any views, sir, on rupee versus dollar and its impact?
Yes. So, Hardik, by rupee now is tied to Chinese currency. In our opinion, we can never ever afford rupee to appreciate against CNY. They are large exporter. We run $100 billion plus trade deficit with them. So rupee has to track Chinese currency. If they depreciate 10%, we have to depreciate 11%. So keep a watch on CNY. Rupee will move in tandem with Chinese currency over medium to long term. Second, we are perennial current account deficit country, and we balance that through remittance, software services, and some capital flows. I think it is time that we create current account surplus, taking advantage of this tariff war. We must negotiate with US, saying that when you buy software from us, you don't have to worry about cyber security. If you had bought this software from China, your country would be hostage to them. So please keep tariff, while levying tariff, please keep the security in mind. Your consumer durables today are connected. Your electrical parts are connected. So please give some red carpet treatment to India, some concession to India for the security which we provide. Hopefully, this security angle will tilt things in our favor, and we will become current account surplus economy over a medium to longer term point of view, and that can result into rupee appreciation. But till such time that happens, we have to track Chinese currency and depreciate more than them.
Fair points, Nilesh bhai. Moving on to Vaibhav. Vaibhav, this is largely the big question minds of our investors, right? Which is from a long-term perspective, and we've obviously spoken about the macro impact. We now want to talk about the market impact. And two factors that generally influence the market. One is the corporate earnings, and second is the capital flows. How do you see each of these play out in the medium to long term, given the change in the situation today?
The corporate earnings have been sluggish for last 2 quarters, and we were beginning to feel positive about them. There were multiple green shoots which were starting to appear in the economy. If you go back in time and look at last 9 months, two, three things happened. Economic activity slowed down because of two reasons. Consumption had slowed down, and consumption had slowed down because RBI had clamped down on liquidity release in the system. And with the new governor coming in, RBI has taken note of that and started releasing liquidity in the system. Second thing which is happening and beginning to happen now is government has started spending money aggressively on capex again. So these two things are giving positive impulses to the market. For RBI, a lot of comfort has come from the fact that inflation has started trending downwards, and we are seeing a positive uh, views from RBI about interest rates. So we're hoping that again there will be interest rate cut. But this tariff situation has again created uncertainty around corporate earning. My view is that there'll be a lot of divergence in how earnings come in different segments of the market. Some segment which are directly exposed to the export economy will get more impacted than segments which are dependent on domestic economy. Having said that, in short term, there will definitely be impact on corporate earnings. The degree of impact will be different across different sectors. So, for example, something like healthcare will not get as impacted. So, hospitals, uh, quick service restaurant, quick commerce, banking and financials are some of these sectors which will get less impacted compared to segments which are dependent on exports like auto, information technology, and so on. So, corporate earning impact will be there in short term. Long term to medium term, there are reasonable green shoots which are there, but they will take 6 to 9 months to play out. Second, in terms of capital flows, we have been seeing a reasonable amount of flows from domestic investors, and FPIs have been primarily selling. In the month of March, we saw some resumption of buying from FPIs also. if things start to normalize and rupee stabilizes, and as Nilesh bhai said, India gets its grabs this opportunity, I think we can see resumption of FPI flows also. And both of these put together should create a positive environment for Indian equity market.
Got it. So, shorter term impact, we may see some sluggishness to continue, but longer term, if we are able to benefit out of the situation, we'll obviously have better corporate earnings and resumption of FPI flows.
So additionally, Hardik, so Nifty earning for this quarter should be around 265 to 270. So which means the full year earning should be in the range of 1050. Even if we assume a 10% earning growth, then we are talking about 1150 to 1160 rupees of EPS for the next financial year. So which makes us, at least in large cap, reasonably fairly valued. I would not say that we are expensive. And if interest rates go down, then these valuations become reasonable.
Got it. Fair point. I think Nilesh bhai was on his way to the airport. He's just getting his Digiyatra entry done, which is why he's requested a couple of minutes for him to come back. Vaibhav, a follow-on question to that, right? And market obviously is Nilesh bhai is here as well.
Yeah,
Vaibhav, follow-on
I'm here.
question. Hi, sir. Good to see you back. This is a question for both of you. Weber, you can pick it first. I'll let you go first. Nifty 50 is, of course, 16% off market highs that was made in September 24. And, all of us who are equity investors are aware that drawdowns are part of the market, but steep double-digit declines typically, make us cautious. What is your view, shorter to medium-term view from here? Longer term view, you obviously suggested both in terms of corporate earnings as well as flows. But what is the shorter term to medium term view from here, Weber?
In short term, we'll experience more volatility in the market. I think Nilesh bhai started by saying that Trump has decided to stop the imposition of traffic or at least postpone it by 90 days. And suddenly there was a news to deny that. So these kind of news flows will dictate what happens in the market in the short term. This should continue till the time there is a decisive move on tariff from Trump administration, and there will be a lot of negotiations over next 3 to 6 months, and all of these negotiations will lead to some volatility in the market. Therefore, I expect in short term markets to be volatile. In terms of long term, as I said, a lot of green shoots are there in the economy. Valuations have become reasonable after the correction. And if interest rates go down and monetary policy and fiscal policy support is there for Indian market, then market should have a reasonable upside in long term. We believe that long-term return trajectory of Indian equity market should be between 12 to 14%. But before that, we'll have to face a lot of volatility over next 3 to 6 months time.
Nilesh bhai, your views here?
So exactly what Vaibhav mentioned, we are dealing with a maverick and we have no experience how this gentleman will behave. Uh, this will create volatility in the market because market always keeps on discounting news. And if one news is tariffs are postponed, second news is no, that's not true. Undoubtedly, it will create volatility. Uh, we have no option but to invest on entrepreneurs and businesses which can benefit from the volatility. There are too many moving parts. So if you believe that any of us are wise enough to predict future, please don't be under that impression. We are dealing with too many uncertainties. But even during subprime crisis, we face the same challenge. On Friday evening, I had gone to visit Lehman new office opening in India at CJ House. And it was a fantastic office with in between lift between their two floors. First time I saw that in India. And everyone was saying that, don't worry about subprime. Things are all under control. Things are fine. And we are here for next 100 years. Monday morning office में पहुंचा पता लीमैन उड़ गया. So we were dealing with those uncertainties then. We didn't know what was happening. But we kept faith on Indian economy. We kept faith on Indian entrepreneurs, and jolly well, that faith was rewarded. I think it is time to go to back to basic. एक बहुत बड़े बल्लेबाज थे सुनील गावस्कर जी, जब भी वो सेंचुरी मारते थे वो फिर से गार्ड लेते थे। तो किसी ने पूछा कि गावस्कर साहब 100 रन कर दिए तब तो गेंद फुटबॉल की तरह लगेगी, आपको गार्ड लेने की क्या जरूरत है? He said, when I take the guard again, it resets my inning. I don't think I am at 100. I think I am at 0. And then नई inning चालू करते हैं.
Right.
This is same back to basic movement. All of us have made a lot of money in stock market in last 5 years. All of us have lost some money in last 6 months. But it is time to take the fresh guard, go back to basics, invest in Indian companies and entrepreneurs, keeping in mind that there is volatility ahead, there will be lower return in the days to come. But if you buy and invest in good companies, good entrepreneurs, eventually you will be rewarded for that discipline, for that patience, for that hit you are taking in the near term. Correction is an opportunity to buy, but that doesn't mean that you buy everything tomorrow.
Right.
This volatility is likely to run longer. एक टाइम भी ऐसा आएगा जब बाघ आया मे नॉट मीन एनीथिंग, बट अभी तो बाघ से डरना जरूरी है.
Right, right, sir. Sir, there is a little bit of disturbance. I think bandwidth is low. As you had mentioned earlier, you may want to switch off your video. Yeah, that's absolutely right. And maybe the microphone closer so that we can hear you clearly. But all solid points. One last question before we let the audience ask their questions. One question each to Vaibhav and Nilesh bhai. Uh, what should be the portfolio construct for investors with fresh liquidity from here? Of course, and there are questions around. We've already got our money deployed in equity market. Should we hold? Should we sell? Should we par with some of our holdings? Should we look at diversifying it across other asset classes? How is gold as an investment class? So generally, a very broader view of portfolio construct from here on, and then we dive into audience questions.
So I'll borrow from what Nilesh Bhai said. Start from zero. Assume everything that you are invested in today is in cash and create a fresh portfolio looking at the current market environment. There are a lot of changes which have taken place in the market, and your portfolio may not be aligned with those changes which have taken place in the market. Last 3, 4 years, everyone has made a lot of money by investing in mid cap stocks, small cap stocks, momentum stocks, and we have forgotten a few basic principles of investing. Asset allocation is something that we have ignored. Second, allocation to stocks with high quality fundamentals is something that we've ignored. So some of these principles we need to revisit, and maybe a good starting point is to look at your portfolio and see if you were sitting on cash, how would you deploy that money? Look at each segment of the market in the context of where the opportunity is given where economic environment is heading. So that's how I would advise investors to look at their portfolio.
Nilesh bhai, you've been in the market for 3 decades. You've seen several highs and lows. Would love to hear from you on how should one look at portfolio construct here on in this market situation.
So I'll exactly echo what Vaibhav mentioned, and let me try to give a different spin to it. In debt, it is time to go for duration. जितना लंबा मैच्योरिटी का पेपर मिले लेके बैठ जाओ, the world will have to cut interest rates to stay away from lower growth or recession or depression. Central bankers will first provide liquidity and then cut rates to ensure that the world doesn't go down. If you are not comfortable taking duration risk, go for performing credit fund. Equity markets are right now kind of shut, and entrepreneurs will have to borrow in performing credit market. There are very few investors there, and you have a great opportunity. In precious metal, do keep gold and silver in mind. There were many Americans who bought gold in Europe and put it into New York This is where you heard Bank of England is defaulting on its gold delivery terms. Their hope was that US will raise import duty on gold and you will have quick return. The now gold import duty has not been raised. This is resulting into gold prices coming down. But we still think this is great opportunity to buy gold and silver. World over, central banks will diversify their FX reserves into gold. एंड दुनिया में इतना सोना नहीं है कि भारत की हाउसवाइफ और सेंट्रल बैंकर्स दोनों को पूरा कर सके. So precious metal should be part of your portfolio. Coming to equity, do keep a watch for large cap. As Vaibhav mentioned, small and mid caps have run up a lot and their valuations have corrected, but still they are higher than historical average. It is time to go towards large cap, especially where valuation comfort is there. Go for quality over momentum. Go for high floating stock market discovered prices rather than low floating stock manipulated prices. And most importantly, go for reasonable valuation and domestic play over expensive valuation and global play. So that's how you can divide your portfolio, keeping Vaibhav's advice in mind.
Great, sir. Thank you for such a detailed walkthrough of portfolio construction from here on. We've got a series of questions from the audience, and I would take up one question after the other. I'll try to address the economic questions first before we deep dive into the portfolio level questions. One of the first questions is, with the strengthening INR and drop in oil prices plus increase in excise on fuel, do you see the government using any benefit from this and raising the infra spend again to counter the potential drop in corporate spending and profits?
So हार्दिक भाई, पहले तो जो बजट है वही खर्चा करना है. नया
Right.
पैसे का तो बाद में सोचेंगे. Last year we had to spend 11,11,111 crore. ये
We
नंबर
couldn't
तो कोई
spend.
ज्योतिषी ने ही किया होगा. बाबू कहाँ से डिटरमाइन करेगा? And despite coming from auspicious angle, we couldn't spend that money. Our revised estimate was 10 lakh 20,000 crore. So I don't think so. Our government is short of money. It has ample resources to spend, but we don't have capacity to spend. The CAG, CBI inquiries, the process of L1, L2, the challenge on the ground, our ability to spend money is limited. And hence, I don't think so. Uh, the government needs resources from the oil prices, excise duty hike. In fact, it will be better off if these benefits are given to consumers.
Absolutely.
Today, our consumers are getting benefited with that 1 lakh crore tax rebate, which was announced in budget, but becomes effective 1st April. Then there is this 8th pay commission coming next year. And if we can support, and then there is interest rate coming down. So your EMI burden will also come down. Now, let's add fuel to the fire by passing this petrol duty cuts, petrol price cuts to the consumer budget. That will give lot of boost to our economy. So I just hope कि एक गुजराती में सॉन्ग है, गमतू मले तो गुंजे ना भरिए, गमता नो करिए गुलाल. When God is kind and gives you a bounty, don't pocket it into your pocket. You should share with others. So I just hope and pray Prime Minister Modi also remembered this Gujarati poem by Makarand Dave, and he instructs oil minister कि भाई जो bounty मिली है अपनी pocket में मत डाल, मेरी pocket में मत डाल, but share it with consumers so that our consumption story can move ahead.
Got it, sir. Very well said. Share the spoils, if I were to summarize it. So the next question are a couple of questions around the sectoral performance from here on, and especially the sectors that people are slightly cautious about are IT and auto. Vaibhav, you want to take up that question on direct immediate impact on IT and auto?
Very difficult to predict, but they are going to get the most impacted by imposition of tariff. So to err on the side of caution, as we discussed earlier, we are moving away from export dependent and global trade dependent sectors and focusing much more on domestic plays. So sectors that we have spoken about are domestic consumer plays, domestic banking and pharmaceutical, domestic healthcare. But one thing which is important to note is that valuations have to be reasonable. One should not buy businesses where valuations are excessive. There are many businesses, even amongst these sectors, which are trading at excessive valuations, and that is something that should be avoided.
Fair. Moving on. Couple of forecasting questions, Vaibhav, Nilesh bhai. When can we expect the current situation of Sensex and Nifty to go back to the peak? I know, this is one of the common questions that our audience has. Typically would have invested surplus liquidity over the last 6-8 months. When do we expect market getting back to the peak?
So हार्दिक भाई, ये तो किसको मालूम है? If you had asked me 4 months back, 6 months back, would I have predicted 22,000 Nifty in the March year? Answer is 100% no.
Right.
Even if you would have given me information that this is how President Trump is going to levy tariff, would I have predicted that Nifty will be 22,000? Answer is no. So let's understand our limitation in predicting market. As Warren Buffett mentioned, he hasn't met a person who can predict future. Same is true with market. Whether markets will go up or down, we don't know. But all I know that if market is becoming cheaper and I'm increasing my allocation with sufficient time horizon, I will be rewarded. This is how we survived 2000 telecom media technology bubble. This is how we survived 2008 subprime bubble. This is how we survived 2013 taper tantrum. This is how we survived COVID-20. In COVID-20, there was as much uncertainty as today. And what was my advice to people? 50% money, please start putting in now. Don't put at one go, do STP. In 3 months, 6 months, medical solution will emerge. The world is not going to die. Will develop immunity or medicine and vaccine will come. And once you get that confidence that now medicine has arrived, go and put balance 50%. People who listen to my advice, could they enter at 7,500 Nifty? Answer is no. People entered from 9,000 all the way to 7,500 and all the way up to 12,000 Nifty.
Right.
But even if you average 9,000 or 10,000 Nifty, today you are sitting on 100% plus gain in almost 5 years time horizon. That's 20% simple return. Not bad. So let's not have the confidence that we will be able to say 7,500 is the bottom and put all your money now. That's never going to happen. Keep averaging in this correction in good quality stocks, good entrepreneurs with sufficient time horizon. You will get rewarded. You will make more money than inflation.
Perfect, sir. Follow-on question to that, since you mentioned that at COVID times you had a number in mind and you wanted to start allocating 50% immediately and then balance staggered over time. What would that number be in today's market situation? Would you have a number in mind, or this is a developing situation again, as you mentioned?
So one, from COVID experience, I realized that 50-50 was too simple. For a risk taker, the number should have been 75-25. For average guy, 50-50 was okay. And for a conservative person, maybe 25-75, 30-70, 40-60 would have been better. Many people came early and couldn't put the balance money because, there was volatility. So I will say, if you are average risk taker, go for 50-50. Now, whether it's 40-60, 60-40, 50-50, 45-55, aapki takdeer. If you are conservative, then please go 25-75. Whether it's 20-80, 25-75, 30-70, aapki takdeer. But if you are risk taker, then at least try to grow 66-33. Don't go 75-25 because we know there is volatility. But try to go 66-33 with the prayer that Kevin has said what he announced will not materialize.
Got it. Vaibhav, an extension of that question, should people look at allocation within equities between small, large, mid cap differently now compared to how they were looking at it earlier?
I think eventually it boils down to valuations, and the point that we have been trying to make is buy quality companies at reasonable valuations. And if I'm looking for that characteristic, large caps is where I find it most commonly. And that's why we have been insisting that stay overweight on large cap and keep your portfolio more tilted towards high quality businesses. So we our view is that 70 to 75% large cap and 25 to 30% mid and small cap is a good allocation to maintain in the current market environment. And we should stick to that. Within mid and small caps also, it's important that you are in businesses which are reasonably solid and run by good quality entrepreneurs and have strong balance sheets and are fundamentally strong in terms of balance sheet strength. And last but not the least, are available at reasonable valuations.
Got it. Couple of investors have asked, should I stop my SIP or pause it for a few months?
The reason to do SIP is to capitalize on these kind of market movements. If we stop the SIP now, the whole benefit of SIP will go away. When you're able to buy markets, and I'll use Nifty number at 22,000, when you have already bought market at 25,000, why would you not buy it? If you don't buy now, the advantage of doing SIP is lost. I'll be strongly against stopping the SIP. But one addition that I will make is choose your funds very carefully. If you are overweight on large cap or mid and small cap in your SIP earlier, maybe you need a much more dynamic approach to your SIP, but don't stop your SIP. The whole essence of SIP is to keep investing when markets are falling down.
Fair. Next question is on global equity markets. Any view on China, US as an alternative or a portfolio hedge in the overall equity portfolio of investors?
Nilesh bhai, you want to take that?
वैभव भाई, अपनी मार्केट में क्या हो रहा है वो मालूम नहीं है, और आप हमें मानते हैं कि हमें चाइना और यूएस के बारे में पता है। पहले तो हम सोचते थे गोरे लोग हमसे इंटेलिजेंट है। नाउ लुक एट देयर कैबिनेट हैज announces there will be delay of 90 days, and that news came from a 2 month old interview. 2 महीने पुराना इंटरव्यू आपने सर्कुलेट किया सोशल मीडिया पे, फिर से लोगों को लगा ये आ रहा है, मार्केट वेंट अप, नाउ मार्केट इज करेक्टिंग। आई थिंक this is time to go back to basic. Saurav Ganguly was the greatest player on offside. When there is a betting pitch, he can think of dabbling on onside also. But when there is a bowling pitch, it makes sense to play on the offside. लेग का बॉल आए उसको भी ऑफ में ही खेलो, विकेट नहीं जाए, भले रन नहीं बने शायद। So these are all lighter vein comments. Of course, you have to follow your dharma of asset allocation. But my recommendation is that we'll have more confidence about India than about US or China. US market is already expensive, and there could be significant derating despite US interest rates coming down. Chinese market, you know, has very bad capital allocation policy. So if you want to dabble little bit in China, US, that's fine, but let your core be in India.
Fair enough, sir. I'd move on to the next question, which is around several questions that are around fixed income investments. Nilesh bhai, you did mention that uh, go look out for extremely long duration papers on the fixed income side. What other avenues would you recommend in case somebody were to allocate money to fixed income?
So, Hardik bhai, duration is the play, or performing credit high yield is the play. You take a call based on what is appropriate for you. If you are going in performing credit, it's an illiquid market. You will be locked in for 7 years. If
Right.
you are going in duration, you will have 6 months, 12 month, 18-month view, but daily liquidity. So choose a combination of both as per your requirement. Our feeling is that duration is a short to medium term play. Performing credit is a carry game. over medium to long term. Now, how much percentage of portfolio? I mean, for each individual, that will be a different number.
No, I think I echo what Nilesh bhai said. In fact, a lot of promoters who are looking to raise money from equity markets will be looking at performing credit market very actively, and that will open up opportunity for investors to invest in these high quality bonds.
Got it. Fair. Uh, okay. Is it wise to consolidate portfolio now? Redeem funds that are performing badly for some time, move the money to better potential funds, or should one wait for some time? This is a question for you, Vaibhav.
No, absolutely. And I uh, partly answered this question earlier that every time this kind of crisis comes, you should start from zero. Assume that every investment that you have is available in cash and relook at your portfolio, recast your portfolio. It's possibly the best time to reconstruct your portfolio from the scratch.
Got it. Perfect. Uh, okay. Uh, Question around gold and silver. Firstly, is silver an avenue to invest? Second, do you recommend taking a fresh entry into gold at current prices?
So we like gold, and we have been recommending that investors should put part of their portfolio in gold. Gold should continue to do well, along with silver also. The avenues to invest are gold and silver ETFs, most liquid and tax efficient instruments. You can invest in these instruments. We run a strategy where we invest money in gold and silver, and investor can consider that.
Perfect. Last couple of questions before we call it a day. When should new investors deploy lump sum? Now or wait for another couple of months for volatility to settle? I know partly you've answered it. Series of questions around a similar nature. I thought it'll be best addressed now.
I think, as we said, we have been maintaining that 50 to 55% of your money can be invested lump sum, and remaining invest over 3 to 4 months. Take advantage of the volatility which can be there in the market.
Just one caveat, lump sum doesn't mean tomorrow. Lump sum effectively means you are doing STP over next 15 days, 30 days, depending upon what kind of levels you are getting.
Got it. Perfect, sir. Uh, One last question before we call it a day. This is for you, Nilesh bhai. What are the immediate triggers that could potentially uplift the market? Do you, any? I know this is a difficult question to answer. Anything that can sort of bring better momentum into the market soon?
So there are many things which can uplift the market temporarily. In the short term, market is driven by flows.
Right.
In the long term, market is driven by fundamentals. So suppose if India tomorrow announces no taxation on capital gains for FPIs, their adjustment will happen, their expected returns will go up at current prices. Then what is it? Yes, today. Hence, there will be buying and prices will go up. The market is worried about tariff uncertainty. Tomorrow, if President Trump announces that, look, Modi is my friend and I'm exempting India, today he's hitting China with 50% additional tariff. He needs someone who is on his side and he says, we will screw China, but we'll now play with India. Our markets will go up immediately. So there are many things which can happen to pull market up. But please remember that the long-term market is driven by fundamentals, not by this movements. Short-term market soda water की तरह है, कभी ऊपर कभी नीचे. Long-term, it's fundamental.
Right.
So please don't have this hope that something will happen and markets will go up. This uncertainty of tariff should be behind us for markets to go up consistently.
Got it, sir. Thank you so much. Thank you, Nilesh bhai. Thank you, Vaibhav, for a masterclass in global economics and financial markets, and also for patiently responding to all the audience's questions. Thank you, Nilesh bhai, especially for accommodating us at such a
Thank you.
short notice and sharing your wisdom with the audience, even while you are traveling. Thank you so much for that, sir.
Thank
To
you.
the audience, we hope this session brings clarity and perspective to the ongoing market condition and how you as investors can navigate this with informed decisions. Markets will obviously always have their volatile phases, but as we've heard today from the experts, staying focused on fundamentals and long-term goals is the way to play this market out. If you have any further questions or you would like to have your portfolio reviewed in light of recent developments, do reach out to your wealth or portfolio manager. Until next time, stay calm, stay invested, and thank you so much once again for being with us. Thank you so much.
Thank you.
Thank you. All the best.
Safe travel, sir. Thank you.
Thank you. Thanks, Hardik. Thanks, Vaibhav.
Thanks. Thanks.